I do think that forward guidance can be useful when policymakers have a materially different or clearer view of the likely path of policy than does the interested public. I would agree at the effective lower bound when we need to provide more stimulus by indicating an intent to keep policy accommodative longer than the public expects. There's a use case there. I also would say, though, that communication comes with a cost of misinterpretation, and it also may limit flexibility. So I think we should use forward guidance sparingly when the course of policy is either reasonably well understood or, on the contrary, is so dependent on uncertain future developments that little really can be said constructively about the future. And a good example of that was the March 2020 FOMC meeting. The pandemic shutdowns were just beginning. The level of certainty was almost unimaginable, and we chose not to issue an SEP at that point. Really, our view was that releasing a forecast at that time might have been more of an obstacle to clear communication than a help. In contrast, as I mentioned a minute ago, forward guidance has really been a useful and effective tool during the current tightening cycle, as financial conditions have tightened well in advance of actual rate increases. You know, the 2-year tightened between the September 21 meeting and liftoff in March of 20. It tightened by 200 basis points before we ever actually lifted rates, and that's significantly because of our communication. So in the current context, until recently, it's been relatively clear that further policy firming would be warranted, and our forward guidance has said so. Now, however, we've come a long way in policy tightening, and the stance of policy is restrictive, and we face uncertainty about the lagged effects of our tightening so far and about the extent of credit tightening from recent banking stresses. So today, our guidance is limited to identifying the factors we'll be monitoring as we assess the extent to which additional policy firming may be appropriate to return inflation to 2% over time. As I noted at the last press conference, that assessment will be an ongoing one as we move ahead, meeting by meeting. Having come this far, we can afford to look at the data and the evolving outlook and make careful assessments.